Hi, Tim Bigham for Delta Derivatives, Option Hedges and Edges, and looking at a market that finally looks like it may need some downside hedging here. Our lead European analyst, Marianne Dillum, has a saying it's called brosser les dents, which strictly translated means, brush your teeth in French, but more loosely translated means kind of take care of the basics up here. And I think we're seeing a market that is finally looking at the fundamentals a little bit for the first time in a very long time. We're looking at stocks, even though the earnings season came out with about 10% year-over-year earnings growth, still very richly priced at well over 22 times earnings, certainly with less than stellar guidance by most of the companies going forward. Don't expect that earnings growth to continue at that pace. Price to sales still well over 2 for the S&P 500, and the tailwinds, stock buybacks and interest rates that were uber low, certainly have been, if not eliminated, dramatically reduced here too. We had Fed President Dudley kind of coming out and trying to jawbone the fact that the Fed, even though the economy doesn't look stellar, will still be raising. We'll see about that. Remember, the end of 2015, the Fed dot plot showed 3 interest rate hikes by the Fed governors for 2016. We saw 1. They're also telegraphing 3 to 4 this year. So far, we've seen 2. So in essence, we've seen rate hikes that correspond to the end of 2016 so far. So jawboning, I think, until further notice by the Fed. And then taking a look at some stocks out here, certainly some of those high-flying names seem to have finally put in a short-term top. The fact that we have VIX, implied volatility, at levels that finally makes option selling make a little bit of sense here. Looking at those names, the big Momo stocks, Tesla, Amazon, NVIDIA. Certainly our auto analyst Marty Bird came out with a note on Tesla, just looking at that cash burn rate beyond extremes here. And certainly the stock pulling back from that 380 level rather sharply. I certainly am no Marty Bird, to say the least, but I kind of agree with his thesis here that the highs, at least, may be in for Tesla for the foreseeable future. Not looking for dramatic downside, certainly simply because it's been jawbone kind of with Tesla as well, that anytime the shorts get too aggressive, they're going to take it the other way on them. Also looking at unusual option activity, we've seen a lot of it talked about STAY. They've been adding to that September 20 call position. Also saw, for example, on Extreme Networks, someone come out pre-earnings yesterday, buy a ton of the at-the-money call. Stock exploded post-earnings, so looking at about a tripler on that one. So I think the big boys absolutely using option strategies to not only take a kind of, if you will, binary bet on earnings, but also express some directional opinion post-earnings, as we said, on STAY, and also stocks like Norwegian Cruise Line. So in this kind of market environment where the downside may finally be a absolute viability here, it's more important than ever to keep those stops in place. So here's a good trading. Take care.